Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, foreign energy metals dropped sharply last week on heavy volume. What went wrong there?
Jim, what the uranium lord giveth, the uranium lord can taketh away. A year ago, foreign energy was trading in the 10 to 15 cents range, based mainly on its Plan A project, which was Janus Lake, farmed out 80% to Rio Tinto, which is looking for a sediment-hosted copper-silver deposit in this part of northern Saskatchewan. Plan B was Love Lake, which is a complex that has an intrusive complex that has potential for nickel, copper, platinum group metal deposits. And Plan C was this portfolio of prospects in the Athabasca Basin on which Forum Energy and its partners, since about 2004 when they got into the uranium game, had spent over $30 million. But in 2015, when it became clear that the uranium broken clock was not going to be right for some time thanks to Fukushima and all the destockpiling that the utilities that decided they were no longer going to run nuclear power plants such as in Japan or in Germany, Rick Mazer shifted the focus to include other metals, what he regarded as energy metals, and uranium, of course, isn't energy metals, and that included copper. And in an odd sense, the Love Lake project isn't really an energy metal, though in another sense, palladium and platinum are used in catalytic converters in combustion engine cars. But in December, after Trump lost the election and the market realized that the clean energy agenda of Joe Biden would become reality, a lot of clean energy related technologies and materials such as lithium took off. Lithium's still doing fantastic. In fact, there's been some very big takeover bids in the last few weeks, and lithium price itself is now higher than it was during its first iteration in 2016, 17. But the uranium became part of this whole clean energy movement because nuclear energy does not generate any carbon dioxide, and it is needed for base load energy when intermittent sources such as solar and wind energy, when those aren't working. So you need something as a base load supplier. So people who weren't very keen about clean energy theme realized that, well, nuclear energy and uranium are part of this clean energy movement. And besides, the people who are most loud about clean energy, they don't like nuclear energy. So this is something that we can jump on. So the whole drumbeat started that nuclear energy is going to have a revival. Joe Biden's going to push clean energy. It's got to be part of the equation. It's unavoidable. And besides, in about 10 years or so, demand from all these projects coming on stream in China will rise and uranium will be back in an uptrend. But uranium's problem has been that since Fukushima, Germany pulled the plug on it for what I think are very foolish reasons. Japan paused all its nuclear energy production because they were concerned that this problem with the tsunami wrecking Fukushima could happen elsewhere in the country, and they have been very, very slow to resume nuclear energy. And these utilities have been dumping their uranium into the spot market, which is quite thin and doesn't have very many buyers because you have to be very qualified to be a buyer. And it got so bad it was even below $20 a pound at one point. And uranium needs $60 to $80 a pound for projects to be put into production and even for the producers to make money. In fact, it got so bad that Cameco shut down McArthur River, the world's richest uranium mine, and instead of delivering on its long-term contracts, it was cheaper to go into the spot market and buy this uranium that the utilities were selling and then deliver it under its long-term contracts. And both Kazatomprom and Cameco both curtailed production, which is down 15% or more from previous year in the last year, in an effort to contain this problem. So we have considerably lower uranium supply happening right now, but it still wasn't making much difference to the spot price. And that's where Rick Rule, who has been a uranium bug for many, many decades, and very much enjoyed the 2004 to 2008 bubble, he decided to revive the Uranium Physical Trust and got it going again, and got that thing relaunched in this summer. And the whole point is to go in there and be kind of a hoarding machine, buy the spot uranium, and just hoard it in some warehouse somewhere so that people can speculate on the future trend for uranium. So in December, Forum Energy caught the market's attention because of its existing Athabasca uranium portfolio, and Justin Hoon, who writes the Uranium Insider newsletter, which is completely focused on the uranium story and technologies and companies, he adopted Forum Energy as part of his portfolio. And so much of the strength in Forum Energy stock this year has been due to his support. But on Friday, he reviewed the portfolio and suddenly noticed that Forum Energy doesn't have any meaningful pounds in the ground like all these other uranium stocks, which have deposits that aren't worth developing unless uranium's well north of $60 a pound. And he decided that this is no good. And Janus Lake, Rio Tinto, has spent $14 million or so since optioning the project in 2018, still hasn't really delivered an intersection with the width and grades that tell you, hey, they're onto a world-class deposit where you just need to do brute force grit drilling to drill it off. It's unclear what they will do next year. They can earn 80% by spending $30 million. Technically, they're already at 51%, which only require $10 million, but they have until 2026 to spend that $30 million. And so they're not going to pull the plug and say, we already have 51%, because that starts the clock ticking right now so that they would have to spend the full $30 million by 2024. So there's uncertainty at this stage as to what Rio Tinto will do next year. Love Lake, they drilled a bunch of holes. The high hope at the beginning of the year was these various mag targets that had emerged within the Love Lake complex. Once they did the EM survey earlier this year, they would turn into conductors coinciding with the magnetic anomalies, which would be Voisey's Bay type magmatic segregation massive sulfide targets. Much to their disappointment, after they completed the survey, only one target had such a conductor. So they drilled a program this summer. They are still awaiting results. Only one of them targets Corwin Creek, yielded anything visually interesting in the core. You can't, of course, tell until you have assays, but the company still doesn't have those assays yet. It expects them sometime later this month. So Love Lake is still plan B at the moment. And what was exciting also in the beginning of the year was that Orano, formerly called Hariva, which is the French company that mines uranium and supplies the French nuclear industry with uranium fuel, it had optioned the Fur Island project up to 70% from Forum Energy, and they were going to drill a number of targets, but because of the warm winter that we had, the ice never got thick enough for them to drill the targets they really wanted to drill. So they were chased off that project prematurely, and what they did drill didn't yield anything particularly interesting. So the hope was, okay, in Q1 of 2022, they'll go back in there and start and do it properly. Hopefully the winter will be cold in 2022. But then Orano apparently has decided we'd like to do a resistivity survey, and of course that can only be done when the ice is frozen, and they can't get in there until mid-January. And by the time that survey is done and the results interpreted, it's too late to mobilize a drill program while the ice is frozen so they can drill through the ice at these targets. So when Justin Hoon also learned that, Orano's not going to drill for Island, that was another reason to say, well, what's going to change for that company? So he put out his sell recommendation, and his followers dumped the stock, and this has been happening. It dropped from 45, 50 cent range down to 30, 35 cents where it is now. And now there's a different type of audience coming in, because one of the interesting things that Forum Energy did last year was stake the Wollaston property, which is in a lake-covered area to the east of the McLean Lake Mill, which Orano owns 77.5%, and Denison owns 22.5%. And this mill was built after the McLean deposits were discovered in the early 80s. They have since been mined out. The McLean Lake Mill processes Cigar Lake ore, which would be Orano's share. The other share of chemical shares goes to its Key Lake Mill, of which it is the operator. But Cigar Lake apparently only has about 8 years of life left. So a big question is, what's going to feed the McLean Lake Mill down the road? Now, Ken Wheatley, who is the exploration VP for Forum Energy, was involved with the discovery of the McLean Lake deposits. And so he has a very deep familiarity with what made them tick. The area to the east, of course, in the last 40 years has been Swiss cheesed by various operators, and nothing significant has been found. So you kind of wonder, okay, what's the point? A private group held these claims for quite a few years, and last year, when Forum noticed that they had been dropped, Ken was very quick to go and restake them, and it's all map staking, so he had to be watching this very carefully, and was in there, and they managed to grab them. And he has some fresh ideas about where they might find these high-grade deposits, and these would be shallow. This is, on the eastern flank of the Athabasca Basin. They're not going to be deep like the ones farther in, such as MacArthur River and Cigar Lake. And they're going to go in there in mid-January and drill these targets that they have generated. And so there's a potential for a discovery, and the bar for what counts as a meaningful discovery in that particular location is a lot lower, because Orano needs long-term supply of uranium. It has that mill next door. So when you do your discounted cash flow model calculation of whatever they have there, you don't need to include the cost of building an entire milling complex like you would with NextGen's Arrow discovery, which is in an area, in the southwestern part of the Athabasca Basin, where there is no infrastructure, where there's absolutely nothing. We have to build a complete standalone operation. So the potential upside value of a discovery with decent uranium grade, this could have high impact for Forum Energy. So people who are buying the stock now are buying it for that reason. But they're also buying it for the fact that uranium needs to go into the $60 to $80 range. This price where it got it to $20, the physical uranium trusts have managed to clean up enough of the spot supply to get the uranium price into the $40, $50 range. It bounces back and forth in there. But they're still getting it back into the $60, $80 range, where it becomes feasible to develop new deposits. And the new demand that builds beyond the current levels really doesn't kick in until 2028. So now is kind of a good time to look at either advancing an existing project and pushing into production, or finding something new. And the Uranium Insider type approach is that, well, it's the existing pounds in the ground that once uranium hits $60, $80, as a result of finally this utility destockpiling coming to an end, and the world realizing that this was an artificially suppressed uranium price, and Cameco and Kazatomprom can start writing long-term contracts at $60 and above, where they start making a lot of money with their deposits. I said the market's attention going to go to these sort of roll front type deposits in the United States, low grade deposits that can be in situ recovery process, such as what is done with the Kazakhstan deposits, and so therefore that's where the money should go. But an alternative view is that if uranium does stabilize in the $60 to $80 a pound range, then it becomes feasible to start looking for high-grade deposits in the Athabasca Basin, which of course is where the highest grade deposits in the world can be found. And that's where the existing portfolio, of which there's still about 8 or 10 projects of foreign energy, start becoming interesting. And one of the projects, the Northwest Athabasca joint venture, they have 39.5% interest. They are the largest owner. The partners NextGen Chemical and Orano are not interested in funding further exploration work. This already has the Maurice Point deposit. It's a lower grade deposit. It's not super interesting, but we know there's, obviously the processes that developed uranium deposits were at work in this area. So Forum Energy is also contemplating going back in there with a program. And Rick Mazur's done the calculations, and he says, with these others not wanting to participate, it would only take $2 million of exploration work for Forum to end up with a majority interest in this project. So this is possibility next year, dependent on financing. Wollaston drilling this first quarter, if Ken Wheatley's ideas are correct and they latch into something that could ignite stock. But the rest of the portfolio is starting to attract interest from other juniors who recognize that nuclear energy as part of their clean energy future makes a lot of sense. In 20, 30 years, fusion will probably replace it, and both renewables and nuclear energy will be obsolete. But in the meantime, it's a long, gradual transition period, and this artificial slump in the uranium price will resolve itself, and higher grade deposits will be developed quicker than lower grade deposits, especially if they're in a jurisdiction like the Athabasca Basin, where Saskatchewan has supported uranium development, and it is a primary source for the rest of the world. Kazakhstan is the obvious supplier for China's growing needs, but countries like France, they need uranium from Canada. They own the McLean Lake mill. They are already a partner with Forum Energy on the Fur Island, and the continued interest is just disappointing that they won't be able to drill it in early 2022. But Forum Energy Metals has now switched completely. Janus Lake is probably Plan C. Love Lake still Plan B, pending results. And their whole Athabasca Basin uranium portfolio is once again Plan A, with over $30 million worth of work done. And the appetite for uranium plays, it makes sense. And there is, this whole physical trust accumulation afoot to clean up this utility stuff that keeps coming into the market, and just hoard it and hold it and make the whole uranium exploration and development sector viable again.
We'll have more with John Kaiser right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, when will DLP Resources resume its Sullivan 2 hunt?
Jim, I've been wondering when they are going to get a permit that allows them to drill on the Moby Dick and Enzu properties that are part of this 3-property cluster called DD, Moby Dick, and Enzu in southeastern British Columbia, where there is deep potential for a Sullivan-style deposit. And Sullivan itself is a 150 million ton world-class deposit. If you found something like that big, it'd be worth, billions of dollars, $4 or $5 billion. If you found something maybe 2/3 the size, a 90 million ton deposit similar to the Hermosa Taylor deposit that Arizona Mining found them in 2015-16, and which South 32 bought out for $2 billion. Well, that would be a pretty good prize also for DLP Resources to come up with. Now, the DD property, the underlying owner is PJX Resources, and they had it farmed out to Teck, which drilled a very deep hole that took forever to complete. And when it was completed in 2019, they decided, well, we're going to pull out of this. There was some interesting geology there, but clearly there was no Sullivan II present. But the David Leo Pegan, whose first, middle, and last name stands for the DLP Resources, he is a Sullivan expert for that whole region. And he said, we have to option this. He told Jim Stipula, let's go in there and get this project. So they optioned 75%. And then they also acquired the Moby Dick and Enzu property to the east of the DD property. And they did a geophysical survey that had never been done, of a kind that had never been done before, and they saw all kinds of target potential. Earlier this year, they drilled another hole into the DD portion of this geophysical system that they're seeing at depth. It got more interesting results than Teck managed to get, but still no cigar. But they couldn't go and drill the other two properties because they needed to go through the permitting cycle, and so they've had to wait. But the word is they finally got the permit. The elevation of the Moby Dick and Enzu properties is better than it was in the DD area, so they can drill all winter. They hope to mobilize sometime in November, drill the Moby Dick target first, and then proceed to the Enzu target. And this is a vectoring type of thing because the property is reasonably large. The deposit is, even though you're looking for 100 to 150 million ton deposit, it's deep and it could have unusual geometry, so it's still quite easy to miss this type of deposit. But there are major alteration systems, and that's associated with such a depositional environment. So it is a deep vectoring program. So DLP Resources is going to come alive again. They can continue drilling in the first quarter of next year. And the Plan B project, which they drilled this summer, Hungry Creek, that's a sediment-hosted copper-silver type of target. They drilled a VLF anomaly this summer in the vicinity of some high-grade copper boulders that they had found in the prior year. But as they suspected, that turned out to be linked to some structurally vein-controlled type of system. So it wasn't the Janus Lake type of large sediment-hosted system that Rio Tinto's chasing for at Forum Energy's project. And it wasn't yet like the Mount Tenor deposit in Montana, which is sort of part of that whole regional geology. It's now owned by Hecla. It has a 1 ounce per ton silver grade, and it has a 100 million tons of a very good copper grade, but it's had difficulty getting developed because it juts onto some wilderness preserve land, and they wanted to mine it from underground, but they have not been able to really get any permitting green light for such a deposit. The potential to find something like that in this part of southeastern BC is significantly better. Companies have looked, but they haven't really found anything. But what was interesting this summer, while they did sort of regional prospecting and mapping work, they came to the realization that the geology had been misunderstood, that there was another limb of these prospective Creston rocks available, had never really been tested for sediment-hosted copper-silver systems. So they more than doubled the land position this summer as a byproduct of drilling these unsuccessful holes into the target they thought might be a sediment-hosted discovery. And they will return in the second quarter of next year to do more target development work. And Hungry Creek might see some drilling later in the summer of next year. Hopefully, in the meantime, we have a discovery at at the Moby Dick or Enzu property, Sullivan Discovery. But Plan B is the Aurora Copper Moly project that they optioned earlier this year. It's in Peru, and of course Peru has a new president, Pedro Castillo, who is pretty much a leftist and has been concerned that he's going to try and nationalize everything. So far that hasn't happened yet. The company is taking it cautiously. The whole deal is contingent on getting a certain part of a permitting cycle done so that they could go in there and drill this target. So this isn't going to cost any money until we know that Peru is still open for business for exploration of its mineral resources. And the target there, it's an existing copper moly system where a number of groups have looked at it in the past. The shallower potential clearly isn't worth developing as an open pit mine, but the whole system has a deeper core where they've nipped a part of it, and the grade is more promising than what's near surface. And the goal is to go in there and assess this in terms of a potential block caving underground type of operation. So Plan A is to resume the hunt for Sullivan 2 in November this year and carry on into first quarter of next year. Plan B is to take a hard look at the new potential of the Hungry Creek expanded prospect. And Plan C is to go into Peru and carry out this unfinished business for Ian Gendel, the exploration VP, who was with Antofagasta when it looked at this project a number of years ago.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.